Have you ever signed up for car insurance, thought you got a good deal, and then, bam, the renewal comes and your rate jumps 50% overnight? Or maybe you filed a claim and suddenly your great insurance company goes silent for months? Yeah, not fun. In 2025, the insurance market in the US is going through big changes. Rates are climbing, companies are tightening their rules, and customer service is becoming more of a press 1 for this, press 2 for that nightmare. Today, we're going to talk about 5 insurance companies that you might want to avoid in 2025. I'll break down why they made the list, what real customers are saying, and what you should look for instead. Check out the link in the description box below. By the end of this video, you'll know which companies might cost you more headaches than they're worth and how to steer clear of them. Let's explain the companies. Number 1, Kemper Insurance. Why Kemper made the list? If you look at claim satisfaction studies, like the J.D. Power Auto Claim Satisfaction Study, Kemper consistently ranks near the bottom. In fact, in recent years they've often been dead last. The biggest red flag? Claim handling times. Customers report waiting 60, 90, even over 100 days for a claim to be resolved. And in the insurance world, delays like that can mean missed repairs, unpaid bills, and a lot of stress. Market withdrawal. Another issue is that Kemper has been pulling out of certain markets. They've stopped offering their preferred auto policies in many states, and some independent agents have been told they're no longer competitive in their regions. What does that mean for you? If you're a Kemper customer in one of those states, you could get a non-renewal notice and have to scramble to find a new insurer, often at a higher price, because your coverage history has a gap. Bottom line on Kemper: poor claim satisfaction scores, slow claim payouts, withdrawing from multiple states, limited competitive pricing. If you're shopping for insurance in 2025, you probably want to keep Kemper off your short list. Number 2, AAA, Auto Club Group. Why AAA made the list? AAA has a strong brand, great roadside assistance, and a loyal customer base. But here's the thing, when it comes to auto and home insurance, their model feels outdated. They often require you to have a paid membership before you can even buy a policy. And their billing structures can be odd. Some customers report being required to pay premiums in large chunks instead of monthly, which can be inconvenient if you prefer smaller payments. Inconsistent agent experience. Another issue is the split between AAA direct offices and independent AAA agents. Direct offices may shuffle your policy between agents without your consent. Independent AAA agents might provide better service, but they're still limited to AAA's pricing and underwriting rules. If your agent leaves or retires, you might find yourself orphaned in the system, with no one actively managing your account. Customer service concerns. Many complaints about AAA involve slow response times, difficulty reaching a knowledgeable agent, and policies that are stripped down unless you pay extra for each coverage add-on. Bottom line on AAA: outdated billing and policy structure. Membership requirement can be a hassle. Service quality depends heavily on your specific agent. Limited flexibility compared to modern insurers. Number 3, Liberty Mutual. Why Liberty Mutual made the list? Liberty Mutual is one of the biggest names in the industry, but bigger doesn't always mean better. In the last few years, Liberty has been phasing out many of their local sales agents and replacing them with something called companion insurance agents. Companion agents don't just sell Liberty Mutual, they also sell competing companies like Progressive and Nationwide. On the surface, that sounds like more options for you. But in reality, many agents are pressured to push whatever product is easiest to close, not necessarily the one that's best for you. Pricing issues. In many states, Liberty Mutual's rates have jumped significantly. Some customers report renewal increases of 30 to 40% even with no claims or violations. And when you compare the actual coverage limits, Liberty policies can be more expensive than similar policies from competitors. Claims experience. While Liberty Mutual isn't at the absolute bottom in claims satisfaction, they're inconsistent. Some customers have great experiences, others report long wait times, repeated document requests, and unexpected coverage denials. Bottom line on Liberty Mutual. Rates rising faster than average. Service quality depends heavily on the companion agent model. Inconsistent claim experiences. Less personalized service compared to traditional local agents. Number 4. Mercury Insurance. Why Mercury made the list. Mercury Insurance is a popular choice in certain states, especially California and Florida, because they're often cheaper upfront. But as with many budget insurers, that low entry price can come at a cost. Coverage limitations. Mercury's standard auto policies can have fewer built-in coverages, meaning you need to add endorsements to match what's standard elsewhere. That's not necessarily bad if you know what you're doing, but for the average customer, it's easy to end up underinsured without realizing it. Claims handling. In multiple consumer satisfaction surveys, Mercury ranks below average in both auto and homeowners claim handling. Common complaints include slow response times, lack of communication, aggressive claims investigations, regional availability. Mercury's limited geographic footprint also means fewer options if you move to another state. They may simply drop your policy. Bottom line on Mercury. Attractive initial pricing, but potential coverage gaps. Below average claim satisfaction. Not ideal for customers who value long-term relationships with their insurer. Number 5. Farmers Insurance. Why Farmers made the list. Farmers Insurance has been around for decades and has some solid agents, but the company has been cutting agent commissions in recent years. Why does that matter to you? When an insurance company reduces agent pay, many agents have to take on more customers with less time for each. That can lead to slower service, fewer proactive policy reviews, and less personalized advice. Pricing and coverage changes. Farmers is also known for being price sensitive. In some areas, they'll try to beat competitors by cutting coverage rather than improving efficiency. That could mean raising deductibles, removing optional coverages, or tweaking policy terms in ways that save you money up front but leave you vulnerable in a claim. Customer feedback. Some customers report feeling like they were sold on price first and coverage second, only to find out later that their policy didn't cover certain situations they thought it would. Bottom line on Farmers. Reduced agent commissions can affect service quality. Competitive pricing sometimes achieved by lowering coverage. May not be the best fit if you value comprehensive, no surprises policies. How to spot a company to avoid, quick tips. Before we wrap up, let's talk about how you can spot red flags in any insurance company, not just the 5 we covered today. 1. Check claim satisfaction ratings. Don't just look at price, check how customers rate the company's claims handling. J.D. Power and Consumer Reports both release annual rankings. 2. Look for sudden market changes. If a company is pulling out of states or changing their business model quickly, that can mean instability, and instability is the last thing you want in an insurance company. 3. Read recent reviews, not just old ones. A company that had great service 5 years ago might have gone downhill recently due to leadership changes, market pressure, or cost cutting. 4. Understand what's actually covered. Cheap insurance is only good if it still covers what you need. Always compare coverage limits and exclusions, not just the premium. Final thoughts. So, there you have it, 5 insurance companies I'd think twice about in 2025, Kemper, AAA, Liberty Mutual, Mercury, and Farmers. Remember, no company is 100% bad for every customer. In the right state, with the right agent, and the right coverage setup, even these companies can work fine. But overall, based on claim satisfaction, pricing trends, and customer feedback, they're worth approaching with caution. If you're shopping for insurance this year, focus on service quality first, price second. And work with an independent agent who can shop multiple carriers and explain the coverage in plain English, so you're not just rolling the dice on your protection. Need an insurance provider who's reliable, transparent, and easy to work with? One of the best platforms to get insurance for yourself or your business is Next Insurance. They offer coverage at an affordable price that is tailored to practically every industry in the USA. You can check them out with the link in the description below the video and the pinned comment as well and get a quote today. The full review of Next Insurance is also linked down in the description box. Thank you for watching this video. Please remember to like and subscribe to our channel if you like our videos.